How is the Chinese economy faring in light of the Brexit vote? Leland Miller is co-founder and CEO of China Beige International, a leading data firm that surveys over 3,000 firms and 160 bankers across China. He's here to give us a sense of China's economic landscape right now. Welcome, Leland.
Thank you.
So how will the Brexit impact the Chinese economy?
Not directly. The major threat is secondary. So what will happen through the currency channel? Will other nations do something that will force the Chinese to have a counter reaction? What will happen in trade? Will things slow down so significantly that the Chinese will have to spur up stimulus? So the worry isn't that Brexit is going to have a direct reaction on the Chinese economy. It's what other stupid things will happen by other people that will force the Chinese into a box.
And are you getting a sense that firms on the ground there are feeling anxious and nervous about the uncertainty?
Well, it's so new. It's so new. I don't think they've thought through it. Obviously, everyone's going to be thinking that there's a sea change globally. But for China, Asia's really in a different position. The Japanese are really more under the gun than the Chinese are for this. So I don't think it's going through the heads of the average Chinese business yet.
Got it. And we didn't see much reaction from Chinese markets after the Brexit vote. Why not?
Well, they shouldn't. There's an enormous number of factors that go into whether the Chinese economy does well on a quarter-by-quarter basis, and Brexit hasn't coursed through yet. None of the repercussions have. There's an upswing, certainly, in what we're seeing, but there shouldn't be a reaction in Chinese markets. They have to wait and see what's going to go on with the European Union and the UK and how everyone else is going to handle the situation first.
The Chinese premier, though, made a trip to the central bank a few days before the vote to kind of signal that the yuan should be kept stable. Has that been successful?
Well, I think so. Everyone's talking about how the Chinese sort of devalued by almost 1% in a day, and if you look at it, the trade-weighted yuan has actually gone up since the Brexit vote. They want to keep the currency stable. There's not this hidden desire for devaluation that they're looking for an excuse to take advantage of. Right now, China is hoping for stability. They're hoping for a continued stronger yuan. The one thing that could ruffle their feathers here is the dollar. And the story of the yuan is always ultimately a story of the dollar. Super dollar strength creates a problem for China, but they're trying to just deal with this as they see it.
And according to your latest report, China seems to be in a relatively stable condition. Tell me a little bit about the bright spots in the economy right now.
All right, well, things are looking better. We had real weakness in Q4 and in Q1. So we've had 2 consecutive quarters where China looked as bad as it's been since the beginning of our survey. It's just real pervasive.
So 7
weakness.
years, 5 years?
Yeah, 5 years, and even in our pre-data into 2011. So this is some real significant weakness. And what we said in the last quarter was that the type of weakness we saw, which was significant deterioration in hiring, increased deterioration of CapEx, these were the kind of macro factors that would encourage the government to have a policy response. And judging by the data, we saw a policy response. We've seen a lot of chatter for the last 6 to 9 months. We actually saw it course through the economy this quarter.
So how sustainable is this growth long term?
It's not sustainable long term. The question is it sustainable medium term?
To Q3, maybe?
Well, Q3, sure. So we could see this to the end of the year if they do it right, and there's no Brexit fallout that sort of sweeps all this away. Fiscal stimulus, though, it's very interesting. Fiscal stimulus was enacted because the Chinese, not because of the growth numbers, not because of a GDP target, but because the Chinese were fearing their unemployment situation was deteriorating dramatically. And what we're showing is that hiring actually bounced back. We're showing that CapEx, which we have been telling a very, very gloomy story on for 2 years now, that actually bounced back, at least temporarily this quarter. This is the time in which they should be putting fiscal stimulus away, saving it for an even rainier day. Then they can come back with it if things are problematic. But that's not the Chinese way. So we'll see. This could go on for several more quarters, or this could be a 1-quarter blip.
Well, we'll check in with you next quarter and see whether there's some progress. Great to have you, Leland Miller of China Beige International. Are you feeling optimistic about the Chinese economy? Let us know in the space below or on the Yahoo Finance Facebook page.